Welcome back, everybody, for another deep dive. This time, we're going all the way back to the beginning of Bitcoin,
To the Genesis block.
to the genesis, to that original white paper. Bitcoin, a peer-to-peer electronic cash system
Written by the mysterious Satoshi Nakamoto.
by Satoshi, yeah. It's like the Rosetta Stone of crypto, this document. You know, it lays out this whole new way of thinking about money and finance.
And it's surprisingly readable, even for someone who's not like a hardcore techie.
Yeah, it is.
Yeah.
It is. It's really interesting. I mean, it's a vision.
It is.
Yeah.
It's a vision for a whole new financial system. And what's fascinating to me is the context of this. This wasn't just some abstract, thought experiment. This was born out of a very specific moment in time, 2008, the financial crisis.
Oh, yeah.
Right? Like trust in institutions was shattered. People were looking for alternatives.
Right.
And Satoshi, whoever they are, they tapped into that.
Yeah. So they lay out this problem. They lay out the problem of traditional online payments. They're slow, they're expensive, and they require you to trust these institutions, these big banks, these credit card companies, all these intermediaries.
Yeah.
And then the white paper offers this radical solution, Bitcoin.
Peer-to-peer electronic cash. It's like cutting out the middleman entirely.
Right.
No banks, no governments, just you and me transacting directly.
Okay, but how?
Yeah.
How do you make that work? How do you prevent someone from just copying their digital coins and spending them like a million times? This has always been the challenge with digital cash.
Right. That's the classic double spend problem.
Yeah.
And that's where the concept of the blockchain comes in. This ingenious public ledger that records every single Bitcoin transaction. It's like a giant transparent accounting book that everyone can see and verify.
But who's in charge of this giant accounting book?
Yeah.
If there's no central authority, doesn't that just create a whole new set of problems?
Yeah.
Like who do you trust?
That's the beauty of it, right? There is no single authority. Instead, the blockchain is maintained by a distributed network of computers all working together to validate and record transactions.
So it's like a global network of accountants constantly checking each other's work, making sure everything is legitimate.
Exactly. It's a self-auditing system.
Wow.
And to incentivize these accountants, these network participants, Satoshi introduced the concept of mining,
Oh, yeah.
which is, it's kind of like a giant computational puzzle. And the first one to solve it gets to add the next block of transactions to the blockchain.
So it's like a digital gold rush where people are using their computing power to mine new Bitcoins into existence. But wait a minute, doesn't that mean that Bitcoin's just going to keep inflating forever?
Not quite. Satoshi actually built a hard limit into the system. Only 21 million Bitcoins will ever exist.
Oh, okay.
And as more Bitcoins are mined, the puzzles get harder to solve.
Right.
So it controls the rate of new coins entering circulation. Eventually, miners will be primarily incentivized by transaction fees, not just by new coins.
So we have this decentralized system with a built-in scarcity mechanism.
Interesting. Okay. But how does Bitcoin actually achieve privacy? Is it truly anonymous, like a lot of people say?
Well, it's a bit more nuanced than that.
Yeah.
Bitcoin uses a system of public and private keys.
Okay.
Your public key is like your address. Anyone can see it and send you Bitcoin.
Right.
But your private key, that's like your secret password.
Okay.
Only you can use it to unlock and spend your Bitcoin.
Got it. So I can send and receive Bitcoin without anyone knowing it's me.
Yeah.
So that sounds pretty anonymous. But hold on, isn't everything recorded on the blockchain? Couldn't someone, track those transactions and figure out who owns which key?
That's the thing. While the transactions themselves are public, linking them to specific individuals isn't always easy. Imagine, it's like watching money change hands on a stock exchange.
Right.
You see the flow of funds, but you don't necessarily know the identities behind the trades?
Yep.
So there's a layer of obfuscation there. Interesting. But isn't there a chance that someone could eventually connect the dots and figure out who's behind those transactions?
There's always that risk, especially if someone is really determined and has access to sophisticated tools and data analysis. But remember, Satoshi also suggests using a new key pair for each transaction to further enhance privacy.
Okay.
It's like using a different pseudonym every time you buy something online. The more you do it, the harder it becomes to track you.
That makes sense. So it's not foolproof anonymity, but it offers a much greater degree of privacy than traditional financial systems, right?
Yeah.
And that's a pretty powerful feature.
For sure.
Especially in today's world. But the white paper isn't just about privacy, it's about security, too. The whole system is designed to be incredibly difficult to manipulate or attack. So how does it do that? How does all of that actually prevent someone from hacking the system or creating fake Bitcoins?
Well, that's where the real genius of this whole thing lies. Think about it. To successfully attack the blockchain, you'd need to control a majority of the computing power on the network. You would have to outpace all the honest miners who are constantly adding new blocks to the chain.
So it's like a constant arms race, where the more miners join the network, the more secure it becomes. Like a decentralized army, kind of.
Exactly. And the math behind it is incredibly robust. I mean, Satoshi lays out these probability calculations that show just how astronomically difficult it would be to successfully alter the blockchain. The more blocks that are added, the more secure the system becomes.
Right, right. Okay, it's starting to all make sense. We have this decentralized system, this public ledger, these miners competing to add blocks, and this inherent scarcity built into the system. But, what about the practical side of things?
Yeah.
How do people actually use Bitcoin? Like, can I just walk into a coffee shop and pay with it?
Well, that's a great question.
Yeah.
And that's actually where we'll pick up in part 2 of our deep dive.
Oh, all right. Stay tuned, everybody. We'll be back soon.
We'll be right back. So you want to know how to actually use Bitcoin in the real world?
Yeah. Like, can I walk into a coffee shop and pay with Bitcoin? Like, how does that even work?
It's getting easier all the time. More and more businesses are accepting Bitcoin these days, but it's not quite as simple as swiping a credit card just yet.
Okay, so walk me through it. What would I need to do to actually, pay with Bitcoin?
You'd need a digital wallet.
Okay.
It's think of it like a virtual bank account for your Bitcoin.
Right.
That's where you store your private keys.
Right, right, right.
Remember those secret passwords we talked about that let you access and spend your Bitcoin?
Yeah, the private keys. So I need to keep those safe and sound in my digital wallet. But how do I actually make a payment?
When you want to buy something with Bitcoin, you basically send a certain amount of it from your wallet to the seller's wallet.
Okay.
It's kind of like transferring money online, but instead of using bank accounts, you're using these unique wallet addresses.
And those addresses are based on the public keys, right? It's kind of like sending a letter to someone's digital mailbox.
Exactly. And the blockchain ensures that the transaction is secure and can't be reversed. Once you send those Bitcoins, they're gone from your wallet and they're in the seller's wallet.
But isn't that kind of risky? Like, what if the seller doesn't deliver the goods or tries to cheat me somehow?
That's a valid concern. Because Bitcoin transactions are irreversible, there's no central authority to handle disputes,
Right.
That's one of the trade-offs of a decentralized system.
So how do you deal with that? Is it just a matter of trust?
Trust definitely plays a role, but there are also mechanisms for building reputation and accountability. For example, a lot of businesses that accept Bitcoin have online reviews and ratings, just like other online retailers.
Okay, so it's kind of like any other online transaction where you need to do your due diligence and make sure you're dealing with a reputable seller. Makes sense. But let's go back to the technical side for a minute. We talked about scalability earlier. How does the Bitcoin network actually handle all these transactions? Doesn't it get bogged down as more people use it?
That's one of the biggest challenges facing Bitcoin. As the network grows, more and more transactions need to be processed, which can lead to delays and higher fees. It's kind of like a highway getting congested during rush hour.
Oh, yeah.
Everyone's trying to get somewhere at the same time.
So what's being done to address this? Can the system even handle, mass adoption?
There are a lot of smart people working on solutions. One approach is to increase the block size, allowing more transactions to be processed in each block.
Okay.
But this also increases the demands on the miners, requiring more powerful hardware and energy.
So it's a trade-off between speed and resource consumption.
Yeah.
Got it. What other solutions are being explored?
Another promising development is something called the Lightning Network,
Okay.
which basically creates a secondary layer on top of the Bitcoin blockchain. And this allows for much faster and cheaper transactions.
Okay, so how does that work?
Think of it like opening a tab at a bar. You make multiple transactions with the bartender throughout the night, but you only settle up the final bill at the end.
So the Lightning Network lets you make lots of small transactions kind of off-chain, and then you only record the final balance on the main blockchain.
Precisely. It's like having a separate, faster lane for smaller transactions, freeing up the main blockchain for larger, more important ones.
That's a pretty clever solution. But are there any downsides to using the Lightning Network?
Well, it's still a relatively new technology, and there are some complexities involved in setting it up and using it. It's not as simple as using a regular Bitcoin wallet.
Right. So it's kind of a trade-off.
Yeah.
You get the speed and the lower fees, but you need to deal with a more complex system.
Yeah.
It sounds like Bitcoin is constantly evolving, trying to find that sweet spot, that right balance between usability and security and scalability.
Absolutely. And remember, all of this was just the starting point.
Yeah.
Satoshi's white paper, it sparked a whole movement.
Yeah.
And there are now countless projects and developers building on those original ideas, those founding principles.
It's incredible to think that this one document launched a whole new industry. But what about the big picture? Where does Bitcoin fit into the larger financial system? How are governments reacting to this decentralized, potentially disruptive technology? I mean, that's a big question.
Yeah, those are questions for the ages, and ones that we'll dive into in the final part of our deep dive.
Okay, so let's dive into those big questions.
Yeah.
We've covered so much ground.
We have.
We've talked about the technical nuts and bolts of Bitcoin,
The blockchain, the miners.
The blockchain, the miners, the privacy features, even the challenges of scalability. But now I kind of want to zoom out,
Yeah.
look at the bigger picture.
The 10,000-foot view.
Yeah. Where does Bitcoin fit into the existing financial system? Is it a threat? Is it an opportunity? Or is it something else entirely?
It's a question that's been debated really since Bitcoin first emerged, and
Yeah.
I don't think there's an easy answer.
Right.
I mean, governments, regulators, economists, they're all grappling with this, right? The implications of this decentralized, non-governmental form of money.
Yeah, and it's interesting. When I was reading the white paper, one of the things that struck me is that Satoshi doesn't really talk about disrupting the system or creating a financial revolution.
Yeah.
It's more like they're presenting a solution to a very specific problem. The limitations of traditional online payment systems,
Right. It's almost like a very pragmatic, tech-driven solution, not an ideological manifesto.
Yeah.
But of course, the implications are huge.
Oh, absolutely.
Right. I mean, the very existence of Bitcoin challenges this fundamental role that central banks and governments have in controlling money.
So how are they reacting? I mean, are they embracing Bitcoin? Are they trying to shut it down? Are they somewhere in between? What's going on?
It's a mixed bag, really.
Yeah.
And it's constantly evolving, too.
Right.
Some countries are more open to cryptocurrencies. They see them as a potential engine for innovation, economic growth.
Right.
They're experimenting with regulations,
Yeah.
that foster responsible development while mitigating risks.
And others are a little more wary, right?
Absolutely.
They're concerned about money laundering, tax evasion.
Yeah, all the potential downsides. I mean, and there are legitimate concerns, right?
Oh, for sure.
I mean, Bitcoin's anonymity, which is a feature for some, can also be exploited.
Right, for illicit activity.
Exactly.
Yeah.
And its decentralized nature makes it very difficult to regulate in the traditional sense. I mean, you can't just shut down a network that doesn't have a central point of control.
It's like this cat and mouse game.
It is.
Constantly evolving.
Yeah, this tension between innovation and regulation. The technology's pushing boundaries. Governments are trying to figure out how to respond.
Right.
And in the meantime, every day people are just trying to figure out what it all means.
Yeah, exactly.
What does this mean for me?
Yeah.
What do I do with this?
And I think that's one of the most important takeaways from this whole deep dive, right?
Yeah.
Bitcoin's not just a technology.
No.
It's a social and economic experiment.
It really is.
It's a catalyst for change. And it's forcing us to really rethink these assumptions.
Our assumptions about money, about finance, about the role of technology in our lives.
Exactly.
I mean, it's fascinating.
It's funny. The white paper, for all its technical brilliance, ends on a very understated note.
It does.
There's no grand declaration of victory.
Right.
There's no, prediction about Bitcoin's inevitable dominance.
It's not a sales pitch.
No, not at all.
It's more like here's an idea, let's see what happens. It's almost like an open invitation, Yeah. Satoshi presents the system, lays out these principles, and then steps back and leaves it up to the world to decide what to do with it.
So where do we go from here? What's the next chapter?
That's the big question, isn't it?
Yeah.
And I don't think anyone has the answer. But one thing is for sure, the ideas that Satoshi unleashed, they're out there.
Yeah.
And they're not going away.
They're not going away.
I don't think so.
So we've seen how Bitcoin works. We've explored its potential, its challenges.
Yeah.
And now I think it's up to each of us to decide what we think about it.
Exactly.
How we want to engage with it, what role we want it to play in our lives.
This deep dive has been a journey.
It has.
Through the origins and evolution of a truly groundbreaking technology. Yeah.
And like any good journey, I think it leaves us with more questions than answers.
Always.
But that's okay.
Yeah.
Because The most important thing is to keep exploring.
Keep learning.
Keep learning. Keep asking those questions.
Well said. Thanks for joining us on this deep dive into the world of Bitcoin.
My pleasure.
It's been a fascinating exploration.
It has.
Till next time.
Dive deep.